Welcome to Undercover Analyst. While Tesla sold around 500,000 cars in 2020 after coming out of the pandemic, it can be said that they have shown resilience and they have tried to capture the Chinese EV market and face a tough competition there in China. The outlook for the company was to reach 3 to 4 million vehicles a year, and 40% of the sales would come from China, an expansion in China. With around 70% market share in USA, Tesla has to grow in China to reach anywhere near close to the 40% target. So 40% of 3 to 4 million cars is roughly around a million cars. So they need to sell about a million cars in China by 2025 to reach their goal. Let's have a look at what's happening exactly in China. The China sales are really looking solid from the start of the year. Tesla's China sales are off to a solid start. If we see week on week data, in the first 3 weeks of second quarter 23, it has been solid. Tesla sales of cars in China has grown by 33% versus the same period in first quarter 22. So the sales of second quarter is beating the first quarter, which means that's a good thing, and it's beating it by 33%. And then let's look at the monthly deliveries in China. So we see that the first 3 months of 2023, there has been a tremendous increase in the sales. And even if you compare with the previous year of 2022, we find a tremendous increase in the year 2023 for the first quarter. 76,663 cars were sold in China in March of 2023. So that's a positive sign. That's almost a 100% increase compared to February. But these are short-term numbers, and if we look at the bigger number, we might get a bigger picture of what Tesla is doing in China. So what has happened to the market share? The market share of Tesla in China has increased from 6.8% to 10.5%. And that is a tremendous growth by any means. I mean, in a very competitive Chinese market, if you are at 10.5%, you can't say that's a bad thing. In fact, it is very good because there are about 15 odd players in the EV sector in China. If you see here, the market share at 10.5% on the first quarter of 23, you might see that like before the COVID, it was very less, but in between during the COVID, the Tesla sales had increased in China, and now it is starting to slow down again. So what the analyst numbers come up when the company releases their quarterly earnings or a weekly sales, they are mostly comparing it with the previous week's sales, and then when you see that, you find a tremendous increase in the sales. What's really happening? I mean, is really Tesla growing in China? And we need to find this out, and we need a deeper study of what exactly the sales look like. Let's dig deep into the China sales figure. And this is where you find all the problems. This is Tesla Model Y SR. Its sale price in China is about $37,000. The same car is sold in United States for $49,900. This is about a 20% discount in China. So you must be wondering why this is. Let's look at what's the price in China versus Germany. In China, the 37,700, and in Germany, it's $41,990 for the same Tesla Model Y SR. This is a 10% discount compared to Germany. So definitely China is betting on the price cut strategy to increase their market share in China. Not only one model, but let's see this one. Tesla Model 3 SR. It's sold in China for $33,000 approximately, and in USA at $39,990, which means this is also a good 17% discount in China. Again, we compare China with Germany, and you see it's sold in Germany for $41,990. This is around 21% discount in China compared to Germany. Stated differently, what Tesla is actually doing in China is they are cutting their rates. Because it's a competitive market and there are 15 odd players, there's no other way to actually establish a good market share. So they are doing that. And if you see over here 35.6 thousand. That's the average selling price of a car, of a Tesla car in China. By the way, it was $46,000 in the second quarter of 21. So just 2 years later, it's only 35.6 thousand. So Tesla clearly has a demand problem in China. Let's talk about, is it really profitable to sell a car at that price? The cost of goods sold, that is, the cost incurred to make a vehicle, the average is $35,600. We don't have any China specific cost of goods sold in the income statement, which was filed by Tesla. So we just take the average of the cost of goods sold, and that's around $35,600. If they are selling for 33,700 or 36 odd, or if we take the average selling price, we find that the sales in China is break even, or maybe they are selling at a loss. Now this is a huge thing because they are targeting 40% of their sales in China, and the sales have not increased much compared to the past 2 years. In fact, it has slowed down, and on top of that, they are selling it at discount compared to United States and Germany, which means they are clearly trying to penetrate with a lower pricing strategy. What will really blow your mind is from the past couple of quarters, look at the inventory buildup of Tesla cars. This is for the United States. There has been a tremendous increase in inventory, which is a sign of caution, because if you see the inventory buildup over the 4 or 5 quarters, what it does is give a negative catalyst for Tesla. Same is the case with European Union. You look at the European Union's past couple of quarters, and you find another buildup in inventory here. Same is the case with the inventory buildup of EU, that is European Union. All these factors point to incremental negative catalyst for the Tesla stock. Anything can happen maybe in the future. It could be even more price cuts, or maybe production shutdown for a couple of facilities of Tesla. Anything can happen. Though it reports higher sales for quarterly and 6 months revenue compared to previous year, but the high valuation of the stock cannot be justified by the sales growth or EPS growth, and a correction is imminent. We see here Tesla is banking on cutting the price even more. They have continuously cut prices in the United States. If you see in US, Tesla has cut the prices of its two most expensive cars for the 5th time in 1 year. And the same Model S and Model X are now $5,000 cheaper. So clearly they are relying on the price cut strategy, where the other EV players had already pointed this out and said that they are actually putting the industry under intense pressure. So what will happen if you just keep cutting the prices? Maybe you might gain market share, but is it going to hit the profits of Tesla? Definitely that's going to take a big hit on the bottom line. Let's look closely at the stock price of Tesla. There's already been a substantial correction from insiders, I guess, from the highs of the stock, but any stagnant revenue number in US can kickstart a sell-off, and could be significant one this time, because the PE of the stock is 65 already, and it has started to look like high and overvalued, because the earnings will definitely not match the high valuations anymore. With US now looking at a possible recession and the tightening monetary policy, which is happening since the mid of 2022, a significant downside is possible in Tesla. What I'm thinking about is about a 60 to 70% correction in the stock from this point. So it's currently at 236. If I say like a 60% correction in that will be around $90 to $100, and that very much is possible. And even if Tesla increases the market share and increase the sales and try to cover up or try to maintain the earnings for this high PE, there obviously will be substantial correction, because the China is definitely under recession now. And even if Elon Musk tries to avoid this situation, he couldn't do much because he has already seen a slowdown in China, and the economic outlook in China for the next couple of quarters is very bleak. So in my opinion, Tesla right now is overvalued because the EV market is such a saturated market in China that there's no room for Tesla to just keep on cutting the prices and increasing their market share. So I believe that Tesla is overrated at this price. Well, but this man can change many things like he's done in the past. He's always in the news and he uses his PR perfectly, and maybe he might be able to avoid this negative situation somehow and show the world that he really is the superstar of Tesla. But we'll have to wait and watch. If you like this video, please share, subscribe,